Because no two people are exactly the same, no two properties are exactly the same, no two purchases will ever be exactly the same. But there are a few questions that most first-time buyers ask. One of the questions that first-time buyers tend to ask is about deposits. Another one is about the process, and there are a few others. My name is Anthony Lindsay. I am an FCA registered mortgage broker, and I've been in finance for over 30 years, so I know a thing or two. So when you're purchasing your first home, there's probably a ton of questions that you have, but the questions that I tend to get the most are, can I purchase with a X% deposit? The popular one is a 5% deposit. The short answer is yes, because there are lenders that do 95% mortgages. However, the caveat is this: it's a lot better to talk about pound amounts than percentages, because the purchase process requires more than just a deposit. So as a broker, if I know how much physical cash you have towards your purchase, I can do my best to make the numbers work and give you a realistic guide of how much you can get approved for with your mortgage. As a percentage, it makes it a lot more difficult because there are other costs involved, like, solicitor's fees, your cost of moving, there'll be other things. So if you're just giving me a percentage and not giving me a pound amount, it's hard for me to get to that 95% mortgage that you're looking for. But to build on that, the other thing to consider is the higher percentage that the mortgage is going to be, the higher, like the 95% loan to valuation, the fewer lenders who will offer that particular deal. So if you're looking at a 95% mortgage, you may find that some lenders don't offer that. So you have fewer choices, and with fewer choices, you may actually end up paying more. So I always suggest that you pay down as much as you can to lower the loan to valuation figure to give yourself more choices. Another thing that first-time buyers always ask is now a good time to buy? And my response is always, the economy is what is in your pocket. So a good time to buy for you may be a bad time to buy for someone else. So it's always important that you have a conversation with your mortgage broker and that you explain everything that's going on with your finances, what your future plans are, what your job situation is, that they can look at the options out there and they can answer that question based on your individual circumstances and not just what's going on in the external economy. Quite often I'll have first-time buyers who have taken information off social media or off TikTok and have told themselves that either they'll definitely be able to get a mortgage or they definitely won't be able to get a mortgage, which is really dangerous because your individual circumstances are going to be different than somebody else's. So just getting general advice is probably not the best bet. You really should talk to someone that understands your circumstances and can answer that when is the best time to buy question for you. Another question that first-time buyers tend to ask is around lease terms. And there's some new legislation that has come out that will hopefully go into law in the near future. So it will change the landscape as far as lease terms. But at the moment, short leases, so leases under about 85 years, probably going to be a little bit problematic. So you have freehold properties and you have leasehold properties. I'm talking about leasehold properties that have a remaining term of less than 85 years. You'll find that a lot of lenders do not lend on a leasehold property with fewer than 85 years. You can get a leasehold extended, but it can be quite expensive. So that's something that you'd want to look at beforehand. Now, all of the questions that you have can be answered by a qualified professional. So when you're thinking about buying, that's the best time to speak to somebody. Don't wait until you've fallen in love with a property and you're ready to make an offer to start talking to someone to situate yourself. One of the benefits of speaking to a mortgage advisor sooner rather than later is they can explain to you some of the things that you can do to ensure that you have a really strong application. So you'll have lots of questions, and you should have someone that is experienced, skilled, and attentive enough to answer those questions for you. Finding a mortgage broker is a good thing if you are looking to purchase. One of the questions that I do get asked is, what's the difference between a mortgage broker, so an independent mortgage broker, and just going to my bank? The thing with a mortgage broker is mortgage brokers tend to work with a lot of different lenders. So you're going to have way more choice. When you go to your bank, as good as your bank may be and as good as that advisor may be, they're only going to be able to talk to you about that bank's products and services. A mortgage broker can look at a lot of different lenders, look at the criteria, look at your circumstances, and match you with the very best lender for your circumstances. Another benefit is, let's just say the broker gets you an agreement in principle. Then they get you a mortgage offer. So you've started the purchase process. The Bank of England meets every 6 weeks and looks at the base rate. If during that process, which can take up to 6 months, if the base rate changes or the mortgage rates change, a good mortgage broker will look around and see if there are better rates out there. They'll consult you and see if it's worth moving to a better rate. Now, it doesn't mean you have to do that, but if you have a competent mortgage broker that has lots of options for you, they can bring that information to you for you to make an informed decision. If you go to your bank, they're going to have fewer choices to offer you. So fewer choices can cost you tens of thousands of pounds when you look at the term of a mortgage. And I guess the last question that I hear a lot from first-time buyers is, what is the difference between the benefit period and the term of the mortgage? So when you go to get a mortgage, if you are getting a fixed rate, you may get a benefit period of 2 years, 3 years, 5 years. It can be different ranges. That benefit period is the agreed time frame that you'll have that fixed rate if you're doing a fixed rate mortgage. The actual term of the mortgage is the full length of the mortgage. But if you think about it this way, you'll take out a mortgage, let's just say you take out a 2-year fixed mortgage. For that 2 years, you're paying an agreed amount. After that 2 years, you'll get notified by your bank saying that your benefit period or your fixed term is coming to an end. They'll then tell you what rates are available to you. At that point, you can choose to stay with that lender, or you can shop around and see if there are better deals out there for you. So, as I said, there's no two deals that are exactly the same. There are no two people that are exactly the same. So if you're looking to purchase a home, if you're looking for a remortgage, if you're looking for a first-time buyer mortgage, make sure you work with a broker who you can trust, someone who's responsive. If you don't have someone that meets that criteria and you'd like to talk to me, I would love to have a conversation. I don't charge for a conversation. My information is in the description. My name is Anthony Lindsay, and I've been in finance for over 30 years, so I know a thing or two.